welcome to Looking at the Markets with David Moadel. Today we're going to talk about short selling or shorting penny stocks. Is it a good idea? You might have heard that Tim Sykes does it, or you might have heard Jason Bond does it, or one of those guys. And maybe you figure that penny stocks are garbage anyway, and so, why not short them when they go up? You figure they'll go down if they're such trash, right? Well, let's take a look and see if that's a great idea. I pulled up some penny stocks here, about 5 of them. I could have pulled up a lot more examples, and I purposely chose penny stocks that made big down moves, single day down moves. Here's an example, and this is a great illustration of why I do not recommend going long penny stocks, buying penny stocks. Because look at these single day down moves here. Here's an example. Ticker NVAX went down almost 85% in one day. So that's a pretty strong argument for not buying penny stocks. But what about shorting them? Well, if you short them at the wrong time, you can get in big trouble financially. For example, this one, if you had shorted it at the wrong time when it was $4.33, and then it just from there went up and up and up relentlessly. It went up to $5, $6, all right, $6.70, all right, and that's that's approximately a 50% gain in a short period of time. And then it went sideways, and then it went up more to $7.77, a massive move up. And then at one point it kind of went sideways a little bit, and then it went over $8. That's almost doubling in price, and this is over a long period of time. Yes, it had a big drop after that, but while this was happening, you had no way of knowing. You didn't have a crystal ball. You didn't know it was going to drop like that. And so, who's to say you would have had the patience and the tolerance and the funds, the capital to withstand this kind of up move in the stock price? Also, who's to say that your broker would have put up with it, would have tolerated it? Because remember, if your position goes against you long enough and far enough, your broker can margin call you, forcing you to cough up a lot of money to fund your losing position, or they can force you to liquidate your position. They can force you to cover your short position at any time. Brokers can do that, and they will do that if your position just keeps losing enough money. So that's one example. Let's look at some more. This next one is COSI. And these are all penny stocks because they're under $5 in value, and I consider those to be penny stocks. So let's look at the chart here. Let's go back. Let's say let's go to a 1-year view here. And yes, it went down almost 12% in one day. But what if you had shorted it at, let's say, 54 cents? Okay, well, from there it just went up and sideways and up and away, peaking out at 96 cents. All right, so almost doubling there in price. And yes, we know in hindsight that it went down after that, but while this was happening, you didn't know. For all you knew, it could have gone up more and more and more. It could have gone up to over $1, $2, $5. You didn't know. And who's to say you would have had the patience or the capital to withstand that kind of move? And who's to say, again, that your broker would have tolerated it without margin calling you or forcing you to liquidate your position? Let's look at CMLS. Went down over 11% in one day, so you might think this is a great penny stock to short, but again, you do it at the wrong time. I mean, if you had shorted it back when it was 25 cents, and then it went up to over 50 cents, more than doubling in price, and you didn't know it was going to come down after that. For all you knew at that moment, it might have gone up and up and up, because at one point it had been over $1. Let's look at let's try ACST. Went down over 2% in one day. And we'll look at the 1-year chart just to look overall. And yes, it had a big plunge there, big plunge. So you might think, oh, this is a great candidate for a penny stock shorting. But what if you had shorted it when it was $1.32, and then it went up over $1.50? You know what I mean? It just, you don't know. You don't know what's going to happen at any given time. Well, hey, what if you had shorted it? It had a big, massive up move there as well. What if you had shorted it at $1.25 and then boom, it went up to $2.81? Huge up move. All right. Yeah, again, it came down somewhat after that, but you just don't know. Here's our RGSE went down almost 41 dollars, 41% in one day. But if you look at the big picture, there were times when there was a time when it went from $3.51 if you had short sold it there, and it went up to $6.59, almost doubling in price. So I think you get the idea. Shorting penny stocks might seem like a great idea, but if you do it at the wrong time, um, you can get into real financial problems there. So if you want help putting together a real trading plan, an investing plan that works for you and does not rely on speculation, please send me an email anytime. My email address is davidmoadel@gmail.com. If you like this video, please give it a thumbs up on YouTube, leave a comment, I like to read your comments, and subscribe to my channel so you can get the latest updates on my financial educational content. I hope this was helpful. Thank you so much, and I'll talk to you soon.